Oh, how are you guys? It is me, the accomplished Chain. Um, I am going to go over FOMC days, because most people don't trade them at all. But FOMC days are some of my favorite days because and I think it's important to show this strategy that I have of volume bar analysis with uh, FOMC days. So you can see that the randomness and chop really isn't so random after all. There is a method to the madness. Um, so let's just kind of go over the strategy of really what I do with how I create these green and red lines. Um, Essentially, what these green and red lines are liquidity changing hands, or there's just spots on the chart where buyers or sellers showed strength, and when price returns there, we usually get some sort of reaction, or if it's chopped, that in itself is a reaction, and you can, you know, judge and take in context what we're looking at. So let's just start from like the left to the right and kind of go over. This is the entire FOMC day yesterday. The 12 o'clock announcement was right here. I guess it's 2 o'clock for Eastern. And then the press conference started right here. So yeah. Anyways, let's we can see overnight. Zoom in. So what I'm looking for are these areas where buyers and sellers have a change of hands. So we look for a base, and then a quick and sudden movement in the opposite direction. And what I do is I look for the basing bar, which is the bar before the um, price changes hands, and I will put in this case, we have sellers, so we put a red line at the base, at the bottom of the basing bar here. Yeah. Um, and so what these bars are, we have our, of course, our 4,000 volume setting here. Yes. And so this is 4,000 trades just shooting off in the opposite direction. And when price comes there, we see we have a reaction. So this is 6:30 a.m. before market open. Had a nice reaction. Um, and then we have this line, which is going back several days, actually. So this is one, two, it's 3 days ago where we had this basing. Zoom in a little more. I wish there was an easier way for me to zoom, but there's not. We have a base. This is perfect, and then price shot down. So we put it down here at the bottom of the basing bar where the candle opened. So it's not at the wick; it's at this little base. And sorry, it's kind of hard to see. It's really hard for me to zoom in. But anyways, that was made 3 days ago, and we zoom back out. You can see price chopped there, and then it really took off. So where sellers once were, then there were a bunch of buyers. Um, and we clipped it, kind of chopped around a 7:30 at the open. This would have been a really good short opportunity where it sucked in all these buying liquidity going upwards, and then it just sold off. And then we created another little supply zone here in the middle of the day. But, you really don't want to trade all this because it's, pre FOMC. It's just a bunch of chop. You really want to, the meat of the action comes after the announcement, right? Um, so we have this other green. I kind of marked it out. I don't want to zoom in yet again, but there is a little liquidity zone here for what buyers were, and we fucking hit it to the tick and sold off. So this is what like the initial, like, that algorithmic driven trades where it just shot up and down. This is how you can tell that like there's just limit orders sitting right there by big institutions in New York at 4918, and price hit it here and immediately rejected, and my dumbass, for whatever reason, just put a limit order down here where these buyers were. You know, we have a buying base. So this is like the opposite of these sellers. We have sellers coming down, the sellers based. We put the green line at the top of the red candle, whereas here we put the red line at the bottom of the green candle. For the buyers, we put the green line at the top of the basing candle. And of course, we hit it here. Had a nice reaction straight up to that green line to the tick. And so I got stopped out here almost immediately. That was just a poor trade. I should have waited. And as you can see, that green line here where I entered was resistance, resistance, chop, 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 chop. Finally broke above. Conference started. We have another little green zone. So if I'm just going to hit my F3, make a little line, double click. We hit it. You could have bought right here and just had a stop out under here. And then we rode up all the way into the day. And then these are the two red lines that were formed from like days ago. This is the one from earlier, but this middle one here was from like this guy back here that I showed you, like 2 minutes ago. That formed 3 days ago, and sure enough, price just hit it perfectly, rejected it, and we sold off for the entire day. So this right here, this is really the money shot. You had all these buying going into here. They all got trapped. There's a few ways to play this. You could just set a limit order here and just walk away, and this would have been the high of day. This would have been the best possible entry could have possibly have asked for right here at 42950. Just kind of just shows how, and I mean, like, look at that. I can't even zoom in far enough to like show you how like perfect to the tick we got. Never broke back above it. Balanced here, and then we just broke down. So you could set a limit order here. You could wait till it breaks under here. You could just market order sell here, expecting to come down. Yeah, you just have to kind of write it down. You take profit here. We got a reaction under VWAP. Sellers continued. So you just kind of write it down. You can take profit here, 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 here. Down here at standard deviation, or until you see buyers really step in, like here. Yeah, so we could mark that out. I'm just going to take this, Command C, Command V. And right at the top of that basing candle, and look, just hit it, chopped, hit it again, couldn't break above, sold off for the remainder of the day. And then today, market is still open. As you can see, oh my goodness, we are just ripping into today. But look, this one line from yesterday at about 1 o'clock, my time in Denver, it just bounced, never got below it. We chopped here. I actually did take this trade. This is, again, still today, the 2nd or the 1st of February. We had a little supply zone here. I limit ordered 2 contracts at this guy. Sold one right here. Should have been at this line. Sold the second one right here at the standard deviation. And this was the low of the day. If I would have held this, I would have been fucked because this is as low as it went. And this is one of my favorite setups here, actually, is when we're changing hands from sellers to buyers at the lows of the day. So all we have to do is just rip. We have this supply zone, which I marked out and traded on the downward for a few points. I made like $350, and that's the only trade I took today. And then we hit this little green line perfectly from yesterday after our, this is kind of where the sellers gave up. And we chopped, held it, reclaimed this red line, and this would have been a fantastic long today. I wasn't at my desk. But if I was, I would have taken this long, and then you just take it up the levels, take profit here, 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 here. However many contracts you got, you just keep going up and up and up. And you just trail it too. You bring your stop up, to the underneath this line, and then underneath VWAP. Once you reclaim this, just just keep moving your stop up, and the market will give you points. I mean, look at it right now. We, as we speak, we just hit this green liquidity zone in the fucking middle of nowhere. You know, I mean, try calling that top. You know, right here at 318. And now we're moving all the way back down to levels. We held this line right here perfectly. This would have been a great entry for continuation. And you just kind of leave the levels here until they are proven wrong, until they stop working. Right now, they all kind of working. I'm just going to leave all of these guys here because you never know which one's going to hit. And you just kind of have to judge. This is where you know, your human and intuition has to come into play, whether or not you want to take it. But sometimes you just have to see it and act and get in that like flow state of just not even thinking about it. You're just like, okay, we're just gonna reclaim this and we're just gonna hold it to here, see what happens. So yeah, I kind of threw it a lot at you there. But I hope that kind of clears up, you know, how you can trade the FOMC volatility with confidence, because it's so random and you just don't know and you're just guessing, and this takes a lot of guesswork out of it. I might make a trade here, but honestly, I was talking all this time and missed a great entry right here. Just 3 minutes ago, I could have taken that short and taken profit right here at the standard deviation. Right now, I'm not really interested in trading this because I already got my profit for the day. If I expect, I would see this filling out for the rest of the day, this zone right here. Who knows? You see. So yeah, I hope this was helpful. If you have any comments, suggestions, let me know. And I might make, if I need to do like PowerPoint type slides to make things a little bit stick a little bit better, you know, I don't mind doing that. So anyways, peace out. Happy trading.